Hey guys, happy Wednesday. We've moved on through the hump day here, and the markets have pretty much done nothing. Tax reform was the big focus today, causing the Dow to be down 28, the S&P losing 2, the Nasdaq down by 2 as well. Tax reform is all but passed at this point. The Republicans passed it in the House yesterday. Senate passed it over there, but said the Republicans need to go back and vote again in the House because they didn't have the appropriate name, believe it or not. That was one of the reasons why. And so Republicans got up early today. They did their thing. It has been passed. So now on to the president's desk. The thing is, the markets, they already priced this in. We already knew this was going to happen. Everybody was so optimistic this was going to happen that most people decided to just take their profits on the news. That's why you didn't see the markets just blast off today. There's no real reason. Everybody that wanted to be in was in. Actually, just coming across here, Fifth Third Bank says that thanks to tax reform, they're going to announce bonuses and raise their minimum wage. So Fifth Third Bank looks to be the first to try to come out with why this is a good thing, this new tax reform. So let's see what is their stock doing here. Closed down just a little bit today, but up a little bit here just before the after hours, probably mostly on that news. Okay, so look, for the rest of the week, this market is pretty much in holiday mode. The activity is a lot lighter. The overall volume in the market is a lot lighter. You can see, yeah, you can see down here. Here is the volume per day, and I'll zoom in. Each one of these blips that you see on the screen up here is what the actual S&P did for the day, but down here is the volume. So it started off strong, everybody's excited, and now it's dwindling down. Everybody's heading off to Christmas break. So the market's getting quiet. Expect it to stay that way. All the activity tends to happen first thing in the morning when the day traders are there. Everybody's trying to make the best of the morning, and then it calms back down. So that's the market. That's what I expect for the rest of the week. Not a lot of activity, so be careful there. Let's take a look at some stocks that were moving today. FedEx, FDX is the symbol. Federal Express, they deliver the packages. Look, UPS has kind of struggled a little bit, especially with all these new rates that they're charging just around the holidays and that god-awful comment that the CEO made just about 2 weeks ago. But they announced earnings. FedEx had earnings. Here's the move today. Basically, the stock price shooting up 3.5%. They said that the tax plan, very helpful if that does go through, which they didn't know at that point. But if it goes through, then they said they would increase their outlook for the following year, 2018. They already made statements saying that earnings were great, everything's looking good, and 2018 should be good as well. Well, hey, investors love to hear that, right? If you're investing in a company and they're saying, look, everything's good, cheers, man, we're doing good. So the stock added some new highs today, up about 34% on the year, not too bad. Here's a company you might have heard of. You've seen the commercials. They spend a lot of money on advertising. The company's called Stitch Fix, and the reason why each day looks a little large there is because this is a new company. Back here is when they went public for the first time. Well, what happens is everybody looks at their first earnings cycle for guidance going forward. That was today. Today they announced earnings that were actually better than expected. Wall Street had some low expectations, I would think. But they did a little bit better. Here's the problem. Just like Blue Apron, just like Snapchat, look back at some of these companies that just went public. Stitch Fix is online. So the main focus is the cost to acquire one customer. You guys are watching this video now, and I hope that you will go to Jazz Wealth and open an account with us or start working with us. The cost to acquire a customer. I'm doing these videos. I spent money on all this stuff. There's a certain cost to that. Well, if you're Stitch Fix, you're a public company and you have to tell the world how much you spend to acquire one customer. That number is high, and Stitch Fix said, we are going to accelerate our marketing. Notice they used the same word just like Blue Apron used, how they were going to accelerate their marketing to acquire more customers. Well, what Wall Street's going to do going forward is in the next earnings, they're going to say, what did it cost you to acquire one customer? If the answer is more than what the customer is worth over the life of them doing business with them, then unfortunately, Stitch Fix is going to look more like Blue Apron, which has tried to bounce here lately, but you can see basically is struggling down around $4 a share. So Stitch Fix getting hit by about 10% today. Now you know, that's the focus. If you're interested in that company or investing in it, cost to acquire 1 new customer. Big, big deal going forward. Jack in the Box is next. I put this on the list because we had this on yesterday's video. They agreed to sell Qdoba. And today an analyst came out from Jefferies, I believe. Yes, an analyst from Jefferies came out and said, hey, you know, we think that these fast food places, or what they call quick serve restaurants, we think this environment is really competitive right now and Jack in the Box may not be able to compete. Isn't that funny that they came out with negative sentiment the day after everybody was all excited? That makes me think that one of these guys at Jefferies, or the company as a whole, has a bearish position, or they don't have a very good position, meaning they want the stock to fall. How do I say? They're shorting the stock, or they're bearish overall. This tends to happen. Analysts will try to contradict each other in hopes of pushing prices lower or higher. It's just a fun game that they play and disguise by saying, we did all this research and we find that Jack in the Box actually is having a hard time competing. We'll find out if that's true, but for the moment, that hurt the stock price today by about 3%. Complete 180. Yesterday it was up, today it's down. It gave back everything that it had gained yesterday. That's basically it. Don't think that a whole lot's going on in the market. Right now it's very quiet. I would expect that to continue, like I said. As I look around the different sectors, oil continuing to bounce a little bit. Gold saw a little uptick today. If you're looking at different sectors or ETFs you may be invested in. Energy and what looks to be the transports hitting new highs again. So if you're in the transportation sector using exchange traded funds for that, you did good. Let me check real quick. I want to look at Mexico. The Mexican ETF sold off strong yesterday and sold off a little more today. So Mexico not liking the progress we're making on tax reform and how that might affect them competing with the rest of the world in the future. That's all that is. I'll just show you real quick. Here's the Mexican ETF. This is the performance of Mexico. Yesterday it struggled as, you know, we became more sort of accepted that tax reform was coming in. Today it sold off some more as it became finalized. The reason, because Mexico obviously can compete more when our tax rate is so much higher for corporations. But now that the corporate tax rate is going down, that means the US should be more competitive. Mexico might struggle a little bit. That's all that is in the short term. That'll work itself out. Hey, thanks for watching. If you enjoyed, leave a comment. If you're invested in any of these stocks or have questions about stocks or exchange traded funds that you'd like me to add to a future episode, let me know. Talk to you soon.